Here.
All right, so good afternoon, students, and I see many of you are signing on now, so we'll give you another second or two to connect to audio before we get started this afternoon or evening, depending on where you are. Of course, we know my name is Tron Lepet. I'm here with Colleen Lockwood, our Collective Impact Leader of Bridge to Life, and we have a topic to discuss tonight that many of you, and it was kind of surprising to me, but many of you showed a very deep interest in this topic, the topic of all things credit, credit building, the purpose of credit. And we have some folks on tonight some subject matter experts, as I'm referring to them as, who are going to help you understand credit, who are going to help you understand what it means to build it, why is that important. But before we jump into our presentation or to our presenters, the first thing I'd like to ask is for those of you who are new to Bridge to Life, if this is your first time, please put your name in the chat. Let us know what school you attend, what grade level you're entering. If you're a recent graduate, then please let's rep class of 2021, the first class in the history of the earth, of the world, to go completely virtual, right? Worldwide almost. I mean, that's historic in itself. So you guys should really hang your hat on that, and you are truly resilient. So let's put that in the chat. Let us know where you're from, your school. And then also, Colleen, you know I'd be remiss if I didn't do this. If you aren't following us on Instagram, make sure to follow us. And our Instagram is on the bottom right of the screen at Bridge2SFL. That's at Bridge, the number 2 Life SFL. There we go. I missed the life part, didn't I, Colleen? I know you caught that. I caught that too. All right, so make sure to do that, folks. And Colleen, I see we have quite a few other students that join us. I want to give them another minute to drop in, log in, and then I'm going to talk about our newest incentive. And some of you heard this last night, and I'm sure you're excited to hear it again because you're like, wait a minute, are they doing this movie thing again? Well, we are. So just so you know, students, for those of you who came to our mods event, the event at Museum of Discovery and Science, and you sat in the IMAX and watched Fast and Furious, we said, you know what, let's do that again. Except this time, we're not going to go through all the hullabaloo, and you have to go Google the word hullabaloo. It's a word that I use, and I've heard it as a child. But we're not going to go through all of the planning that we did before to have vendors and other presenters. No. We just want to give you guys a summer gift. We just want to say, here, thank you for joining us. Thank you for being committed. So what are we doing? What are we giving you? We're giving you 2 movie passes to go see Space Jam, you and a +1, to go see Space Jam, the newest movie starring the greatest basketball player of all time, LeBron James. And David, did you just shake your head? Okay, I guess we can have some conversation offline about that. And then also Black Widow, or you can just go watch any movie of your choice. We want you to see those 2 because we think they're age appropriate, wink wink. But really, you can watch anything you want. So if you showed up yesterday, congratulations. If you showed up today, great. That means you are now eligible. All you need to do is show up to 2 of our summer workshops between now and I believe the date is, Colleen, correct me if I'm wrong, the date is July 19th, 29th?
So attend 2 workshops between Monday, July 12th, which was last night, and July 29th.
July
2
29th.
workshops qualifies you for the 2 tickets. However, first come, first serve.
First come, first serve.
All we're saying. Okay.
Thank you, Colleen. So again, if you attended last night and tonight, congratulations, you're qualified, you're eligible, all right? So, and there are a select number of tickets, so just keep that in mind as well. Okay, we have students still pouring in. This is great. Keep filling up that chat. Let us know who you are, where you're from. We greatly appreciate it. And without any further ado, let me introduce our amazing hosts, our presenters for this evening. We have with us Mr. David Koenig. He's the market president for the state of Florida. Mr. Koenig has over 35 years of experience in the banking industry and is more than prepared to help answer as many of your questions as possible this evening. I'd also be remiss if I didn't introduce our other presenter for this evening, Michael D. Martelaire. Yes. And they're all a part of our Comerica partnership. And if you guys remember, Coach Mo she works for Comerica, and I forget her position off the top of my head. But these are good friends, good contacts, and colleagues of hers, and they've taken time out of their schedule to be with us this evening. So please, students, let's take notes, let's ask questions, and I'm going to pass the floor. I'm going to pass the mic over to Mr. David Koenig. So David, the floor is yours.
Great. Thank you, Tron. And Colleen, if you want to go to the first slide.
Here, Dave, I'll pull up the first slide. Give me a second to get it shared.
Okay.
Let's get to the big screen here.
Perfect. So while Michael's doing that, so I think as everybody knows, tonight we're really talking about credit, the importance of credit, understanding what credit means, how it can help you as you continue to move on in your life. So a lot of great information that we're going to share with you tonight. So if we go to the next slide, we'll just show you some of the items that we're going to go through.
All right, come on, there it goes.
Okay, so we're going to talk about what is credit, why does it matter, really important. We're going to talk about the credit reporting agencies, so you need to understand who those are. You might have heard some of them. Michael's going to talk about that. Credit scores. What is a credit score? What is a good credit score? What is a not so good credit score? And why do you need a good credit score? The 5 factors of credit, really important. The length of negative information, you're going to learn a little bit about that, what that means, and how to build or establish great credit. And that's really important. And Michael will share with you why you really need to understand why it's important to build and establish that credit, and how it will help you in your future. So with that, I'm going to turn it over to Michael.
Thanks, David. So everybody, I want to say thank you very much for joining tonight to learn more about credit. I want to tell you credit, think about credit. Credit is a foundational pillar of your financial life. It's going to affect however you do things in your life when you finance a portion of something. It could be a house, it could be a car, it could be an apartment. Credit is in all those factors in your life. And so we're going to talk about that so you're more informed. You can make informed decisions about your credit and credit score. So we're going to move on here. And so here's a quick saying of what credit is. Credit is the ability to borrow money or access goods or services with the understanding that you'll pay later. That's what credit is in the simplest terms, is that somebody's going to lend you some funds, and they're going to lend you those funds to buy goods and services, and they have an understanding that you'll fulfill your obligation to pay the organization, a bank, credit card company, a mortgage company, a finance company for a car back over a period of time. It's based on your promise, and you'll see how that affects and how that works into everything. So think about it. What are all the different areas that you need credit for? Major, minor purchases. Refrigerators, dishwashers, washing machines, all things you don't need today, but you may need in the future as you have home ownership. Now, you're at a point in life, you're getting ready to be an adult, you're adulting, you're getting, ready to that next step. So you're going to look at an apartment. A lot of apartments nowadays are looking at credit reports. Financing a car. I remember when I first financed my first car, I paid cash because I bought it from the neighbor. But my second car, I went to a dealership and they did a credit check on me. And the good news is I had paid attention to my credit. I had good credit when I bought my first car. Phones, utilities are all looking at credit. Some employers ask to see your credit because they look at your ability or how you've handled your credit as a responsible person in society and to other employers or to other organizations. Some organizations will use your credit to verify who you are when you're looking to open up an account. So in examples for that, you might go to a bank, and one of the forms of information that they might ask for you to provide, if you don't have some other forms of identification to say, do you have a credit card? And do you have a statement with you? Because a credit card company has verified who you are and verified important information about yourself. And now I should have said this before I started. If you have questions, I cannot see the chat. So Tron, if you see somebody asking a question in the chat, will you please interrupt me? Because my screens are all with the PowerPoint that I have, so I cannot see the chat. So if someone has a question, please ask it, or wait until we get to the end. I'll be more than happy, or David's more than happy to answer questions about this credit, because it's a complicated
We'll be looking at the
subject.
chat.
All right, thanks, sir. Because it is a very complicated subject. And I always say the more knowledge you have, the more power you have to affect your financial well-being. So there's actually 3 credit bureaus that manage credit scores. We have Equifax, TransUnion, and Experian. And all use pretty much the same information that they gather that's in the public realm to create a credit report. And so you can see they've been around for quite a long time. Equifax incorporated in 1913, TransUnion in the 60s, and Experian was in the 60s also. So they've been a long time. They've had a lot of time to gather a lot of information, because credit was more common starting in the 60s and moving on, because we got used to paying for things over time. Before, you had to pay for everything up front. Or you might have gone to a store like Sears, and they may have a store credit that they use for you to pay things over a period of time. So when you think about credit, what do they look at? So they're looking at creating a score. And so you heard that story from Tron about how he worked with his mom when he was younger, about your age. And he had a great credit score. I think he said 759, which is outstanding. But when you move away out of the house and you don't pay a few attention to things, that credit score can go down. And so they have rankings in how that credit score looks like. So it's a 3-digit number, and it's designed to predict risk. The higher the score indicates a lower risk on factors, and we'll go over about those factors later on in our presentation. And not everyone has a credit score. I've worked at a bank now for 22 years, and I have had a few folks who come in because they've lived by the motto that they pay cash for everything. So they save for it, they save up for a house, they pay cash for their house, they pay cash for their cars. So when they finally needed credit, they had not developed a credit score. Or if you come from Europe to the United States, you might have a European credit score, but it doesn't translate to us here in the United States, and vice versa. If I went to Europe, I wanted to buy something, I would have to figure out how to establish credit in Europe, because my score here in the United States does not translate over into Europe. So the credit score is based on a FICO score. Again, here's the numbers broken down. 300 to 579 is very poor. 680 to 669 is fair. 670, 739 is good. Very good, 740, 799, and then above up to 850. Now you're going to ask, what do those numbers mean and how do they affect me? The simplest answer, how they affect you, is based on where you fall in this pie chart, will affect your ability to acquire credit and the interest rate that goes with it. Because again, a lender who is borrowing you money is looking at risk. And the higher it is for them not to receive their money back, the higher the credit interest rate they are going to charge you for the money that you're going to borrow. And that's going to be across the board, be it a credit card, a car payment, a mortgage, going to a store, say Target and Walmart, and getting a store card. All those interest rates are based on this score. So it's important to pay attention to it and check on it. So we go to that next slide. Come on. There we go. Here's Vantage. They're all pretty much all the same ranking. You can see there's not much difference between Vantage and FICO. Very little difference in how they look at that. So they have everybody in the same tiers almost. And so you can't think, well, I'll be good for one and be bad for the others. That's not how it works, because they're pulling this information down from public records. So where do they get some of the information that's created in this report? So they look at payment history. So they're looking at what have you done with your credit cards, your car payments that you might have in the future, a house payment, a store card. Some cell phone companies now report activity into the records for credit scoring. So payment history is 35% of your credit score. The next thing they do is look at amount owed. So here's an example. Say you have applied for credit cards and you received 2 credit cards, $5,000 each. And you ran up one credit card for all $5,000, and then you used the other one with $4,000 out of on that credit card. So you have 90% of your $10,000, $9,000 of your credit card already used. Now, credit card companies like to see, or lenders like to see, that percentage to be down between the 30 and 40% amount of what you have available to use. So they're looking at how much is owed and based on your availability. Credit length. They're looking at how long have you had a credit card or used credit. Now, you're just starting out. You might not have very long credit history, because everybody has to start from somewhere. But I'm going to tell you that David probably, if you asked him in his pocket, he probably has a credit card that's over 25 years old. I have a credit card that's 22 years old in my pocket. So looking at the length of our credit history is important to the individuals that make decisions to borrow funds. Looking at new credit. So they're looking to see how often do you go out there and acquire new credit. So now back to my example about amount owed. You're 9 out of 10. You said, well, I'd like to have a little bit more credit. So you go out and get another credit card to get to 15 to have, bump that number. So now it shows a new credit card on your report, and that will have an effect on your credit score. I guess the best way I can tell you, everybody, on this is I was out on a cruise and I thought, well, I was listening to the cruise sales for the next cruise, because it was a really nice one and it had a good discount rate. They said, hey, if you get a credit card here, we'll give you an extra 20% off based on a discount because you use our credit card. Well, I was going to pay it out. I would pay off the cruise when I got done, but I like the 20% discount. Well, I got back and I had, a 10-point differential in my credit score because I put new credit onto my credit history. So they took 10 points off. So if I was at a 720, now I went to a 710. And it takes time for that number to go back up because it's new and it has to age. And typically it's got to take 2 years to show it goes from new to standard or in length. And then they look at your type of credit. They're looking to see, do you have term loans, meaning loans for cars, mortgages, things for a longer period of time, versus credit debt for credit cards, which is revolving, meaning you run it up to $1,000, you pay it down to zero. You run it up to $1,000, you pay it to zero because that's considered revolving. So they're looking at how you manage your credit and what the different types of credits you have. So that all goes together, creating your credit score. And so managing it is very important because if you make a mistake on your payment history, that mistake stays out there for a long period of time. I made a mistake once on my payment history and I didn't pay attention, and they stayed out on my credit report for 48 months until it dropped off. So that little check box, and I only had one, but I checked my credit and it was like, oh, yep, there, I forgot that payment. And even though I made that payment up and I paid a penalty, that was a ding against my credit score, and it stayed out there for 48 months. So that payment history is very important. I always tell folks, if there's anything you can do, always make your minimum payments, no matter what. Make those payments. So let's compare some scores. So what happens when you have a good score versus a low score? So when I say good score, I'm talking in the 700 range, 720 to say 780. A low score, 680 to 620. So on a good score, you're going to go out there, you're going to borrow $5,000 on the credit card balance. Same company, two different scores. You can see in this example, there's a huge difference in interest rate because they're looking at that score and they're factoring in risk. Other factors are the same. 60 months, you have 60 months to pay it back. But look at that difference in monthly payment. On a good score at 14%, you're paying $116 a month. On that low score at 24%, you're going to pay $143 back. Your total payments, about $7,000 for the good score. So you're thinking about that. It's $2,000 more than what you borrowed. But when you look at that poor score or the low score, you're going to pay $8,600 or $3,600 more. So you almost doubled the amount that you paid back by having a low score. So it's important to manage. And when I say, and I talk about that a lot when I work with folks, it's all about managing it because you can manage it. So of course, where can you review your credit history? And there's a lot of different places you can go. I can tell you, number one of the credit cards, two of the credit cards that I have currently offer credit monitoring, meaning they keep me up to date on my credit score. They tell me how many accounts I have open, how long I've had my accounts. They tell me what my outstanding balances are overall. So I can, in a quick snapshot, I can see a big screen. It gives me a huge history of my credit. You can also go to annualcreditreport.com, and this is a free site, and it will allow you to pull up a credit report. It will not give you a credit score, but it will give you history of your credit. Of course, this information is used by lenders. So if you go and apply for a loan and you're determined that the loan credit worthiness is not acceptable and you declined, you can ask that lender for a report or access to the report that they made the determination with, so you can see what the issue was. Of course, credit bureaus, the three that collect information, and of course, it's all about your individual credit history. And so I'm going to give you a little story here about somebody who did not check their credit. I was working with a client, and he was a fairly famous basketball player, and he came in and he wanted to do a business loan. And I knew him and knew him well, and so we sat down, we talked about what he was looking for and what loans fit in with what he was trying to accomplish. And so I got his information, I sent it down, and they sent it back. They asked me from our lending department, did I know this, if this gentleman had these credit open in all these different cities? And he had credit in the West Coast and the East Coast and in California, in quite a different other cities. So I sat down with him. I called him back and come in. And I sat down and I said, "Sir, have you looked at your credit report lately? Because we've uncovered all this information." He said, no, he had not, because he's, a professional basketball player. He was on the road and he was very busy all the time. And he, of course, practicing, keep his craft up and be in the league. So he never thought about checking his credit report. And all of a sudden, we had uncovered somebody had accessed his information. Multiple people had, unfortunately, had this information. And then he needed to know about that so he could go out there and resolve these issues. So it's not just somebody like me that may have an issue when I look at my annual credit report because someone's created identity theft on me. It happens all the time for everyone. And it's a great story because you need to check. He didn't check. So the loan he wanted to do and the project he wanted to do was put off for 6 months because he went out and he had to hire an attorney and do a lot of footwork by hiring people to take care of this issue, to resolve it so he can move on and clean up his credit so he can move on and do his project, which is he was very successful at doing. So when you get a chance, even now, go out to annual credit report and put your information in and see what's reported out there underneath your name. It's important to understand what's out there, and it will help you read and understand what that information and how it's reported to you. So we talked about that information, and I talked about that negative information on my account that happened. Here's a good example of how long this information sits out there. If you go through bankruptcy, I'll use another story, also another gentleman I worked with. And I'm going to talk about bankruptcy in this case. He worked for an auto dealership as a dealership manager. And he came in and I knew who he was. I knew the company he worked for. I knew they were very well-off company and they pay their employees well. And he was looking to do a mortgage for a house. And he said, again, I went through all the process, gathering all the information. He never told me that he had a bankruptcy in his history. He didn't disclose any of that. So when we got back with the information, all of a sudden he had bankruptcy, he had charge-offs, and he had collections on an account. And now this, again, is another individual who had a very large income. Now, we couldn't do a loan for him because he had all this negative information that impacted his credit score. So it made it to be underneath a 600 credit score. Now, I would have thought, based on who he's working for and the income that he was earning, that he would not have been in that category. But unfortunately, he did. He did not pay attention to what he was doing. So he had bankruptcy, charge-off, closed accounts, and collections. The other things that stay out there, inquiries. So that new car that you're looking at, you might go out. When you go to a dealer, make sure you've had a few things. So you might want to talk to your bank or credit union to see, what they're going to finance you at. You might ask one of the dealerships to get, when you're there, it'll give you an idea, but you don't want to get 10 dealerships to do inquiries because that will have a negative impact. Late payments. On here it says 7 years, but I believe it's less. Judgments, public records. So if you're in a lawsuit and there's a judgment against you, it's out there. Tax liens, the IRS will file a lien and it's out there until it's paid off. And then it stays out there to show that you had one in the past history. Lenders are very nervous about tax liens because the IRS is in front of everybody. So if they lent you some money excuse me, and you bought something with that, like a house, and the IRS says, well, you're going to have to forfeit whatever you own to pay off your tax liens, that lender is out that money. So that's why they're very careful on how they lend funds based on information that is in the public realm. So we've talked about a lot of negative stuff. Let's talk a little bit about positive stuff. Like, how can I build some credit? So let's look at, 5 ways to build your credit. Now, when you're starting out and you might not have any credit, you can look at what's considered apply for a secured credit card. What is a secured credit card? What that is financial institutions have a credit card that you can apply for, but it's backed up by a savings account that you're putting money in. So an example would be you've saved up $500 and you want to have a credit card, but you don't have any established credit and you want to establish some credit. So you go to your financial institutions, they have a secured credit card product. You put this money in a savings account that's secured. And so your limit is based on that $500. So that card will function just like a credit card where you're going to pay it back on a monthly basis. That will help build your credit score because it's going to be reported to the credit agencies as an active account in a positive manner. Of course, you can apply for a credit builder loan. You can become an authorized user on somebody else's credit card. So say your mom or dad has a credit card and you want to be on that card to help establish your credit. They can get a card in your name using their information. You want to make sure you get credit for the rent you pay. If you borrow money for a car, maybe you get a car co-signer to help make that loan go through because you haven't established credit yet. So there's ways to establish your credit or build credit. And these are just 5 of the many different ways. So besides building your credit, how do you improve that credit? So one of the things are, I'm sorry, go ahead.
I'm wondering if we should stop for questions here on that prior slide.
All right. Sure.
That it raises a lot of questions. Students, there's some obvious ones like, how many credit cards is a good number to have? What is a credit builder loan? I actually don't know what that is. Can students speak up? Monica, Jency, Samantha, do you guys have questions? Any of the students here? Let's stay here for a second because this is key for you. This is what we need to talk about. Do you guys understand these 5 things? Do you know what to do next?
I actually have a few questions. The first question is, since you said one way to build credit is you can get credit from paying rent or getting a secured credit card. What's the best way you would recommend to use that credit card? Like, for example, would you recommend using it on necessities like food, maybe other student stuff, like maybe buying a book, or what's the best way for a teen to build their credit score without going over their limit when it comes to buying wise?
All right, that's a great question. So when you're working with credit, I always tell folks you should have a budget in place also to help manage your money because you're going to work your credit that you're going to pay back into that budget. So you make sure you always have money inside your budget to pay down your debt. So using, your credit for the first time, you had a great question, should I buy groceries? Should I buy a book? And I tell folks it's not what you purchase. It's the repayment in a timely manner at the minimum requirement, because they don't make a difference of you know, if you say you have a credit card and you buy a $50 school book and you pay $20 this month, $20 next month, and $10 last month, or if you pay it all off at once, you only have one box that's checked showing that you've made a payment. Whereas if you do it 3 times, you get 3 boxes and you're establishing a payment history, because that's what they're looking for that first big part of your credit score, that 35%. The second part is, of course, the other 30% is your utilization. So if you have a $500 credit card, you don't want to use all $500 up. You want to think about you're staying within that 30% limit. So you only want to ever go up to that $150 amount. Now that means you have $350 available to use, say if you have an emergency, because that happens, but then you pay it down. Hopefully that you have some savings in place, but you pay it off on a systematic manner, and you build that credit also by using your utilization. Now, for amount of cards, there's not a good answer to that. I've seen people have 1 card, and I have seen people with 20 cards. And as long as you manage them responsible, you're good. And again, that's based on utilization. 1 card that I knew a gentleman had a $100,000 limit. He never let it go over $10,000 in utilization. But he had built up, based on his income, a large amount of access. Now, other gentleman who had 20 only had about 2,000 or 3,000 on all the cards that he had. And so he had a business, and so he used the cards to the credit for different points and different things, but he made sure that he paid them off timely all the time, so he had a good payment history on all the cards across the board. And so rent, you want to make sure that if you're renting an apartment, that apartment, hopefully you can ask them if they're reporting this information to the credit bureau, so that you can help build up that credit history, because that shows a timely payment of an item that you signed a contract for, because you signed a lease agreement, because you can do that now because you're 18. So that's a great question. I appreciate that. Hopefully, did I answer that for you?
Yes, thank you. And I have 2 others.
Yep, go ahead.
I didn't fully understand what a charge off and a close account was. I have an idea for close accounts, but I just wanted to make sure it was the right definition. Do you mind
No, I
giving
appreciate
both definitions of those?
Yep, so we'll start with charge off. It means exactly what it says. It means that lender has charged that amount off, meaning they do not think they can collect that debt, and so it's outstanding still. Whereas a closed account, you've told that credit card company you no longer want that card, or they determine they're not going to supply you a card. So an example would be on a closed card, I had a card that I hadn't used in 3 years, and they sent me a letter saying, hey, if you don't want this card in 30 days, if you want to keep it, make a charge on it. If you don't want it, don't make a charge on it, and we'll close it out in 30 days. So that would be considered a closed card. Charge off is really, closed account, it's going to ding a little bit because your utilization number is going to change and it's going to go lower. So let's say you had $10,000 available to use and you're using 5,000, and 5,000 you had never used and never charged anything on that card. Well, they decide because you're not using it, they don't want to extend it to you. They have that option to do that. Then they close it. Now you went from having 50% utilization to 100% utilization. That's going to have a ding on your credit score. Great question. Did I get that for you?
Yes, thank you. One last question.
Yep, go ahead.
Normally, getting a credit card and building credit is normally to just show that you're reliable to make a big purchase, such as building a company or buying a house. I was wondering, how likely is it for someone to be approved for a loan in their early 20s, since there's not that much history, credit history?
Right. So it's a great question. So in your early 20s, you're establishing your credit. So an important aspect of that is when the lenders you go to, say you're going to go to purchase a car, because I purchased one in my 20s when I was in college. So I went and, I had established some credit, but it was new credit. So the other aspect is they looked at, of course, your income, and they were looking to see your debt to income ratio, which is a whole different discussion, but they were looking to see your ability to repay based on other factors. And income is one of those factors that they're going to ask you. So when you do a credit card application, they do ask you what your yearly income is going to be. They're going to ask you what your rent is going to be, or if you have a mortgage payment. So they're going to, so each credit card application is a little different. And same with when you do a car purchase or a home purchase, the requirements of what information they're going to ask for is going to be a little different. But based on the information, then they determine what amount of credit they're going to extend to you based on what they believe the capabilities of you being able to repay that debt. So it's a good question, but it's a hard one because you're just beginning to create that credit information in your life. And that's why it's important to, when you're, if you get a chance and you turn 18, it doesn't hurt to get, and you have a part-time job, get yourself a credit card or secured credit card in place so you can build that history while you're still maybe living at home and going to community college or a trade school to help get yourself set up for later in life for what you want to do and accomplish. That's a great question. Did I answer it for you?
Yes, thank you.
Oh, you're welcome. Who else has questions out there?
Seems like you're covering the topic really well, Michael. So I guess we can move on. Students, do feel free to come off mute and ask your questions if you have some. We'll continue to move on with the presentation then. Thank you, Michael.
Yeah, I think Jency is raising her hand. Did you
Oh,
have a
okay.
question, Jency?
Okay, my question is, how do you recommend, like, for you to not get overdraft and tips, like a tips? What are the steps of the tips you could recommend us for us to in managing your credit in order for us to not get overdraft? Like, if I'm buying something, like I'm paying my phone bill for $500 and I got only $400 on my credit card, and then I pay the bill of my phone $500. How can you know that we got overdraft? How can you take it, all of those?
All right. So let me repeat your question back so I understand it and I got it right. So you're asking, what steps can you do to manage your funds? In your example, you used a phone bill of $500, but you only had $400 available left on your credit card to make that payment towards your phone bill, correct?
Correct.
All right. So that's a great question because it builds into a lot of other aspects in your financial life. And so understanding how you can use things to make things work. So in your example, you're saying, hey, I have a phone bill of 500, but my credit card only allows me to do $400. And so now you have a $100 gap because your credit card is going to allow you to pay the $400, and it may or may not allow you to go over that $400. Some credit cards will, some credit cards will not. It depends upon the company you're working with. And so I can't speak to that aspect. And so you have to, I always tell folks, you know, with technology today, you're able to monitor all your information that you have coming into you, meaning it's a good thing. If you have a checking or savings account, I tell folks you should be monitoring those accounts, going online at least once a week, if not more, just to look at your balances to make sure that the activity you're doing is the activity that's showing up in your account, to make sure you don't have any unauthorized activity occurring on your accounts. And the same thing with the credit card. You'll check it to make sure that the activity is on there, so you know where your balance is at, you know where your minimum payment is at, so you can see your expectations. Now, on a cell phone, I don't know if that, you know, if it will be able to tell you what your bill is going to be before it happens. Most of the time, it's based on your plan, and it's very important that you understand your plan so you never get caught up in a position where you go over, say, a data plan or something, and all of a sudden you have a huge fee. Or if you make international phone calls, all of a sudden that's charged differently than a regular phone that may not have an international charge. So what are you going to do with that $100 gap? Well, the credit card may let you, and you're going to have then an overdraft fee. They tell you it's $40. Then you'll have a penalty interest rate, which means if you had a 14% interest rate, but you went over, they're going to slap a penalty interest rate on your money. So now instead of being 14, it may be 24. And it's not that interest rate doesn't go down to 14 after you pay it back. Oh no, that penalty rate is going to stay out there until they've determined that you're in good standing, or they feel this is your new rate and this is where it's going to stay. So, you have a lot of critical decisions when you're looking at that, or hopefully you have other funds that you can use to pay off that $100. Hopefully you say you have $100 in your savings account that you can pay it down to $4. You put the other $4 on your credit card, which then you can pay it over on a longer period of time. But then I would challenge you to say, is your next month phone bill going to be another $500? Because if it is, you've not helped yourself. You've just dug a deeper hole that's harder for you to get out of. So now I challenge you to make sure that you get out there and you create a budget so you have the funds available to make, so your credit card bill every month is going to be $500. You need to get in there and adjust other things that you're doing to be able to pay your credit card and also to pay that phone bill, because it's going to be where it's at. So did I answer your question pretty good for you?
Yes.
Let me
Okay.
just add one more thing to add what Michael was talking about. So really, and this is a whole nother subject, but what he was really referring to was how to create a budget. What does your budget look like? How much are you making each week or each month? And what are your expenses going to be? Because you want to make sure that you can't spend more of your expenses than what you have. So it's creating a budget, and there's a lot of information that goes into that, but that's something to consider as well.
Thanks, David.
Mhm.
Anybody else have some questions? So if it's okay, Colleen, I'll move on to the next slide then.
Yes, I think we've allowed ample opportunity. Let's keep going. And just in terms of a time check, we're 10 of, we might float a few minutes past 7 o'clock if that's okay, just to make sure we get through your presentation. This is such important information.
Yep, that is not a problem. I'm here until the questions end.
Yay.
So steps to improve your credit history. So these are all the steps. So when you pull a credit report and you see something on it that is wrong, you have the ability to dispute an error on that credit report. There's a lot of guidelines. I would tell you, you have to go read to the internet. You have to read all the different guidelines because they're different for each one of the credit reporting agencies. And you almost have to, if one's got something wrong, you almost need to check the other two, because it's almost guaranteed the other two are going to have the same information as that one. So make sure you dispute an error if it's out there. Again, I always tell folks, pay those bills on time. On time, on time, on time. It's the biggest thing. I mean, you see all this advertising out there on, hey, I can fix your credit score in 6 months. Let me help you out. Well, they're going to charge you. They're going to ask you to give them money. And what are they going to do for you? They're going to pay that credit card bill on time. Well, save yourself some money. Make that payment on time yourself. That will raise your score all unto itself. When you get a chance, again, talking about budget, inside that budget, pay down debt. So you got work on a budget that helps put all this together. Make sure you have your debt to income ratio, or not that, but your utilization score percentage low. So keep that low. So, if you see it creeping up to that 30, I challenge you to get down to 25 or 20. Keep that utilization down. That'll help drive your score up. I made a foolish mistake. At one time, I closed one of my oldest cards because I got mad at the company that I had the card with. It was actually my first credit card, and it was Sears. A lot of you guys have heard of Sears, and Sears was one of the few companies that did credit cards to younger individuals. And so they upset me, so I closed my account, and my score went down. But I felt better. That's all I could say about that. Remember, refrain from applying for credit needlessly. So if you're going to look for a car, don't have that car dealership go pull your credit before you even start the process, because you may look at a car and say, you know what, I've decided I don't want this car. So you spend a lot of time and effort, but they also ask for personal information. They pull the credit report on you right away to see if you're a viable, credit risk. Wait until you've decided what car you want before you start using the credit aspect. Of course, you can put some holds on your credit at the agencies. You have to go through the steps. You have to go out and look at the agencies to see what they require. Make sure that you can stop inquiries, because there's organizations that will inquire on your credit to send you credit applications. Right, so the difference between what we're going to talk about next is hard inquiry and soft inquiry. What are they? A hard inquiry is information you're going to provide to a lender. So like on a mortgage, I'm going to give them my income, my social security number, a lot of other information for them to take a mortgage loan application. That's going to be a hard inquiry. When you do student loan, that's going to be a hard inquiry. When you fill out a credit card application and send it in, that's a hard inquiry. Now, if you get a credit card application in the mail, that's in soft inquiry, because what that has happened is that credit card company has sent to, said we'll pick on TransUnion, They said, I would like to have a block of your customers that fit within 700 and 740. So they might send them a block of 100,000 names that fit within 700 and 740. And then they send you a pre-qualification offer, which you fill out and send back. And then that turns into a hard inquiry when that happens, an auto loan. So again, like I said, when you sit down with the dealer, don't start with the financing piece first. Figure out everything you like in an auto before you get to the financing piece, before you have them check your credit. Of course, personal and business loans. Soft inquiries. So if you have an employer that does background checks, they may check your credit. Cable, internet, utilities may do a soft inquiry because they want to know if you have issues. An insurance policy, depending what state you're in, that is acceptable or not. In the state, I'm here in the state of Michigan, they're not allowed, an insurance company is not allowed to do a credit check on your insurance. Or your insurance company is not allowed to do a credit check on you because they passed a state law on that. I don't know what Florida is, but some states it's allowable. And of course, a credit score check that you do yourself is the soft inquiry. Of course, I talked about this a little earlier, but monitor your credit score. So here are some of the ways that you can monitor your credit score. Annualcreditreport.com allows you to pull 2 credit reports a year on yourself. Of course, you can sign up for Credit Karma, and I don't know all the ins and outs of Credit Karma, so I couldn't tell you. You'll have to do some research. I always tell everybody, do research when you're looking at these things so you're informed, so you know what you're signing up for. So, and I don't know if Credit Karma does this or not. I'm just going to pick on Credit Karma, and I'm going to say they do, but I have no knowledge, so it's probably 100% wrong. But they may give you a 12-month free trial before they might charge you. So you need to be aware of, if you're doing something, they ask you to put in some information, understand what that information is going to be used for. Credit.com, I've never heard of that before. I know you can go to TransUnion, Experian, and Equifax and ask for a copy of your credit report. And of course, we have Comerica has a product called Comerica ID Monitor that we use with another company. So different ways, and again, it's important that you monitor it because it's the only way you can stop bad information being on there. So if there was a lot of Mike DeMarlairs out there, I might get somebody else's Mike DeMarlair's credit information on my credit report, even though we might have different social security numbers. It does happen. So it's important to be vigilant when you're looking at your credit report. And we talked about this. Managing your credit is a pillar of your financial life. It's your success. It helps you be successful because it allows you to do things and access to money at lower interest rates. I mean, I cannot talk about that enough. Managing that credit score will save you thousands of dollars over your lifetime if you manage it the right way. And it's easy. Pay your bills on time, manage your utilization, monitor it to make sure information is correct, and takes action if it doesn't look right, if something's out there. So again, you say there's a Mike DeMarlair and he got a judgment in Kansas City, but it shows up on Mike DeMarlair's Lansing, Michigan's credit report. Well, I'm going to say that's not me. I've never been in Kansas City and never lived there. So I'm going to go through the steps that the credit agencies outline to contest that information to protect my credit score, because you are, in some instances, you are the credit score, and you need to protect that very much. And this is something that really is beneficial for you guys. The advance of technology has made it easier to really keep track of stuff. So it's, but it's also easier to keep track of what you're doing and how you're spending your money. So it's to a point where it's not really noticeable. Back when I first started out in my credit information, the only way I knew what my credit score was is if I went out and borrowed money. And now as the internet comes up, you have the access to get this information much easier and readily to help you manage it. So use the technology to your advantage. But also remember, technology can take advantage of you because it can report a lot of things that was never reported before. And I think that we're done. So we're back to questions for those last slides or any other slides. So I'm going to stop sharing. And we'll get back and let everybody ask questions.
And students, again, this is an important opportunity here, a special opportunity to ask questions to those who we consider subject matter experts. And it looks like Monica has another question. Monica, the floor is yours.
It's kind of related to credit, but I just want to know, if you did go to college, what did you major in to work in this field?
That's a great question, because I had a roundabout way for working at the bank, and I don't know about David. So I went to college. I did 4 years, but my degree is in the hospitality field. So I went for a hospitality restaurant. So I have a 4-year degree in that field. So I did restaurants. I've owned a restaurant, managed a restaurant, and then I worked for the Fortune 500 retailers on their management team after I got tired of working 100-hour weeks. In the restaurant field, that's part of life when you work in a restaurant. So I went to a major retailer. I thought 60 and 80-hour weeks was a nice thing to do versus what I was working in a restaurant. And then after a while, I heard something about a bank and 13 federal holidays. And so I changed my career to the bank because the bank thought I had the right skills to work in a bank. Because if you think about it, a bank is about working with clients and helping them be successful. So we're always out there as bankers to help you guys be successful in your life, because that's the only way a bank can survive in the industry, is by customers like you going out and saying, hey, I worked with this guy at XYZ Bank and he helped me out. He had me navigate this, and he did what was right by me because he knew this was what I needed to have happen. So I've been with Comerica Bank 22 years now. And I started out in the retail bank 17 out of that 17 years ago. So I did a lot of work with a lot of customers. And that's why I have a lot of stories, because I helped a lot of customers a lot of times navigate some of these things they never thought about, or they were too busy to worry about in their regular life. Great question. Thank you.
Yes. And David, do you have a response?
Yeah, I was just going to say real quick, I'll do it really quick. So I did go to college and study business and had a 4-year business degree, but I still didn't know what I wanted to do with that. And the same thing like Michael, I'm like, let me try banking. And I started out in banking as a teller because I was able to really learn what the bank was all about. I got to talk to customers. I learned how to handle cash, but I started as a teller. And that's when I knew I really enjoyed banking, and then continually worked hard and worked my way up from there. But I started as a teller, where there's some people that think, oh, I can start as a manager, I can start as a personal banker. But I will tell you, it's really great to understand, because now I appreciate what other employees are doing and how they're taking care of customers and how they're working every day.
And that's the interesting part about careers, students. You jump into that first program in college and you just swear this is it. And the next thing you know, 5, 10, 15 years down the road, you're in a totally different industry, a totally different field, but it's something that you enjoy, it's something that you love doing. And the next thing you know, you've worked in that industry. I've been in post-secondary education now going on 14 years. And it seems like just yesterday, I filled out an application at Kaplan University as an academic advisor. And here I am now, assistant director for enrollment. And it still hasn't really hit me that, that's my title, but hey, that's what I do now. Michael, one quick follow-up. If you have any good recommendations for restaurants that serve exceptionally delicious swordfish here in Broward County, I need it. So I'm resting on your restaurant experience, your palate, your palate savviness to point me in the right direction there. And then I have a question for the students. So during our last adulting and financial literacy workshop, many of you talked about many of you showed an interest in starting or establishing credit. So I just like to know this for the students who are on, how many of you have opened or have at least had a conversation with your parents about about opening a line of credit, a credit card, and if you have, what were those conversations like? If you haven't, and you're nervous, just for the ones that are nervous and who are willing, and you guys know this is a psychologically safe environment. So if you're nervous about it, then what's holding you back from doing that? Why are you nervous? But just kind of opening up the conversation here. So if you started a credit card, or if you're thinking about doing, if you had that conversation, how have those conversations come along? That's one question. And then the other question is, if you're nervous or apprehensive, why? What's holding you back from at least having a conversation with your parents? And I'm looking for, we'll just say 1 to 2 students to respond to that. Any brave soldiers? Monica, go for it.
Well, both of my parents actually have good credit scores, so it's been pretty easy to start that convo with them because they're giving me tips and habits that they use when it comes to paying their credit. And normally I didn't even ask, it was brought up to me since I guess I'm at the stage where I'm basically being brought into adulthood ever since I graduated high school. My parents only told me that they would like me to open a credit card to get a credit card because the sooner the better it is to build your credit so you can make bigger expenses for your future, such as buying a house, hopefully buying a car and all of that for to help build credit for your children. My mom, I'm pretty sure I'm under her card, but I can clarify with her because when we went into the bank, I remember that she did put my name. So I think it'll be pretty easy as long as I follow the steps to build my credit.
Thank you, Monica. Thank you so much. So kudos to you and your parents as well for having established their credit and bringing you into that world. I'd like to hear from any other students on the line. If you're apprehensive, if you're still not sure how to even get started, I want to hear from you. We want to hear from you. And just remember, we have subject matter experts on the line. We have folks who have a wealth of knowledge and experience in this industry. So take advantage of the opportunity now. You've heard me say that quite a bit. So anyone else have any questions, apprehension about starting credit, about getting started, etc.?
To be honest, I have started a conversation with my parents, like to answer that question or something. But yeah, I have started a conversation with my parents, especially when it comes to starting to build my credit. But I wanted to get a deeper understanding of what does it mean to have a credit? How does it mean? How can I build it and make sure that it stays that way for my adulthood and later in life? So I feel like this was also really good for me to be able to know more information about my credit score, be able to keep it well. And yeah, that's pretty much it.
And you know what, Tron, let me just
Yes.
add something here. So even after this class tonight, we encourage all the students to connect with Michael and I on LinkedIn. I know Colleen put our LinkedIn on there. So if you have any additional questions after tonight, send us a LinkedIn message, a private message, and we'll be more than happy to help you and try to answer and guide you in the right direction. We'd be more than happy to do that.
David, thank you so much. I'm glad you threw that out there because I was tiptoeing towards that, and you beat me to the punch. But thank you so much. So students, make sure to connect with David and Michael. Again, folks with wealth of knowledge. We do have another question in the chat, so I'm going to read that now, and it's from Berlin. Okay, how often should you check your credit score?
That is a great question. So it depends upon how you're going to access that credit. Think about it. You can go to the annual credit report twice a year. But if you have a credit card that's part of that product or that credit card, I can check it anytime I check my balances on my credit card, and it doesn't affect my credit score because it's part of the credit card score information that they provide to me. So they're always pulling it. And it's updated, your credit score, I think, is updated every 30 days roughly. So they go and they pull up the new information that might be out there for your utilization, and if you got any new credit cards and stuff like that, it's updated on a regular basis. So in this case, if you can have a credit card that has that option that allows you to do that, pick that credit card and use that, because that's an easy window to get into to see what's happening in your credit score and what's happening and reported. Now, it's only on the surface, but if you have a 750 credit score and it says on the report that you're going from a 750 down to 680, you might want to ask some additional questions. Now you're going to go to the annual credit report, pull that. Or you need to go to Experian or TransUnion and pull up one of their credit reports to see what's happened or what's been reported, because it's going to have that negative information right there for you.
Thank you, Michael. And
That
I
was
hope
great.
yes, continue. Yes.
I was just saying that was a great question. Sorry.
Nope, no worries, no worries. And we have a follow-up question. It's directly tied to it. So we have a student that says, I'm 17 years old. I don't remember what I was doing when I was 17 years old. Certainly focus on the question. The student says, I'm 17 years old. Can I check my credit score? So I guess we're assuming that the student has established credit. Can I check my credit score? And I think that's a simple yes, but Michael, I'll leave it to you.
That is correct. You can go to annualcreditreport.com, which is on the slide, and go in there and pull it up. It will tell you if you have a credit score or not. But that's a good way to find out if someone has, I hate to say these words, caused identity theft. You know, all of a sudden you pull it up and you have a bunch of information and it's not you, then you need to start the steps, even though you're 17, to contest all that information, to clean that up, to protect yourself. Because again, like I said, that score stays with you and goes up or down, and however things are happening in your life. And you know, we all have hiccups. My credit score at one time wasn't very good either sometimes, because I made a few times I forgot and did a few dumb things in life. You know, it happens when you're younger. It recovered, but it took years. It doesn't happen overnight. Everybody wants immediate gratification to fix stuff. It doesn't happen that way. It takes time. But if you do the right things, that time goes fast. Great question.
Awesome.
Thank you.
Awesome, awesome. So students, we're gonna wrap up now, but do me a favor, please show some love and appreciation to Michael and David for taking time out of their day. They both listed their LinkedIn, or Colleen listed their LinkedIn accounts in the chat. We'll do that again just to make sure. I think we had another question come in here, but we'd like you to direct those questions to our subject matter experts, our SMEs, who have graciously offered, and again, thank you, David, for offering that, graciously offered to connect with you one-on-one and answer your questions. I mean, guys, I'm telling you, that is such a blessing and a benefit to you. So take advantage of it, please. As for us, as for Bridge to Life, we thank you again. Our 4th week of summer programming. I think we have like 1 more week left, 2 more weeks left. I don't even know. 2 more weeks left. Thanks, Colleen. Wow. Wow, what were we thinking? I mean, we are so ambitious. All right, so students, thank you very much for your time. Have a wonderful evening. Remember the other incentive, we're giving away movie passes, 2 movie passes for showing up to 2 of our events, 2 of our workshops between now and July 29th. David, Michael, thank you very much for your time. Have a wonderful evening. Students, make sure to connect with them. That's the last time I can say it. I've already said it enough. Make sure to connect directly. Any last words, David or Michael, before we close officially?
Sure. Go ahead, Dave.
No, I'm just going to say it's our pleasure. We love doing this. We love helping and teaching. And I know Coach Mo's going to be back, I believe, next week. But yeah, please don't hesitate to reach out to Michael or I if you do have any other questions, because we really enjoy doing this, as hopefully you could tell. So thank you.
Right. And I would say thank you to all the students. You guys were really engaged, had great questions. I always tell folks every question is important because you may be asking it, but there's 10 other people that have that same question. So thank you for asking those questions. And Tron, I'm going to be sorry to tell you this, but I'm in Lansing, Michigan. There's no swordfishing where I'm living. So I have no restaurants I can send you to, sir. Sorry about that.
No worries, Michael. The search continues. The search continues. All right, everyone, have a wonderful evening.
Bye.